Welcome to Crypto Insights, where we teach you about crypto. My name is Thomas and I'm the host of this channel. In this video, I'll discuss the problems between Binance and FTX. Actually, the beef is between CZ, which is the CEO of Binance, and Sam Bankman-Fried, who is the CEO of FTX. So a lot has happened since last week. Mostly negative. We've seen that the prices have been plummeted 24% if you look at the overall market cap of cryptocurrency. 260 billion has been lost since last Sunday. There is also a positive side, and that is something that I also will discuss in this video. So with all of that said, let's jump into this week's video. So before I start this video, I would like to ask that if you like this content, please press the thumbs up. And if you like my content in general, then please subscribe so you will be the first to see my videos. So Binance versus FTX recap. It all started in 2019 when FTX was founded, and Binance was one of the main investors. Then 2 years later, the competition between FTX and Binance became real, and FTX decided to buy back Binance investment. In return, Binance was given 2.1 billion in BUSD, so the Binance US dollar, and FTT, which is the token used to pay less fees on the FTX platform. Last Sunday, that FTT was worth 580 million, and currently is barely worth anything. Then Sam Bankman-Fried began lobbying with regulators against Binance and even targeted the Binance CEO's children. So this is a nasty way of competing with your competitor Binance. Then we go back to recent. So in 2022, there was a leaked Alameda Research paper showing that their balance sheet is mostly consisting of FTT and locked FTT tokens. Alameda Research is also owned by Sam Bankman-Fried, besides FTX. This means that FTX and Alameda Research are strongly entangled with each other. It is important for you to know that Alameda Research is mostly aiming for farming. That means getting rewards through DeFi. This means that Alameda uses FTT token as collateral to generate yield. In collateralized loans, it is very important that the price of the collateral stays stable, because if not, you get margin called. So in order for the price to get stable, if the token drops, you have to add more of that token as a collateral to keep being in the loan. As Alameda is fully funded by FTX, it means that if the price of the FTT token drops, Alameda has to sell their assets or deal with the margin calls. Then the communication started, and this was actually last Sunday. So CZ, CEO of Binance, stated, liquidating our full FTT position is just a post-exit risk management, learning from Luna. And we all know what happened to Luna. We gave support before, but we don't pretend to make love after divorce. We are not against anyone, but we won't support people who lobby against other industry players behind their backs. Then Alameda Research responded. So Alameda Research CEO Caroline replied, if you're looking to minimize the market impact on your FTT sales, Alameda will happily buy it all from you today at the price of $22. This message shows that if FTT was trading lower than $22, it would go into problems. Liquidation would start taking place in Alameda Research. This was the start sign for traders to start shorting FTT, so betting on FTT going lower. So besides Binance selling, also traders start trading against FTX with the FTT token. With that news, FTX exchange holders were massively taking their crypto out of the exchange. On last Tuesday, $6 billion was taken from the FTX exchange. Later that day, FTX halted any further withdrawals, the same as what happened to Celcius. Then FTX asked Binance for help to take over the FTX exchange. So since FTX was without liquidity, they just wanted to have a takeover by Binance. After Binance looked in the book called due diligence, they decided to not go any further. So 1 day later, Binance stated, as a result of corporate due diligence, as well as the latest news reporting regarding mishandled customer funds and alleged US agency investigations, we have decided that we will not pursue the potential acquisition of FTX. So now Binance doesn't want to buy FTX. It means that FTX is going into bankruptcy, just as Celcius, Voyager, BlockFi, Luna, and Three Arrow Capital. So, what is the positives from here? First of all, we need to learn. Centralized exchanges, not your keys, not your coins. So, try to get your cryptocurrencies out of centralized exchanges. And although I hope that you are not caught in this one, like I am caught in Celcius, it is also good that the funds that are in FTX are now locked. And this can take up to 7 years, even 10 years to be released again. This means that the liquidity in cryptocurrencies is now drying up. So some Bitcoin tokens, some Ethereum tokens are locked in FTX and they couldn't be sold or withdrawn from the exchange. So this means that Ethereum and Bitcoin becomes even more scarce. Another thing that I really would like to tell you is that this price drop of 23% has nothing to do with cryptocurrency in general. This is an exchange issue. So the fact that Bitcoin, Ethereum, and other cryptocurrencies dropped 24% or more, this is just a big discount because the Bitcoin and the Ethereum and the other cryptocurrencies are still the same as 1 week ago, just a lot cheaper. So really use this opportunity to buy bags of your favorite cryptocurrencies. So this is the end of my video. I hope you like it. So if you liked it, please like and subscribe. If you disagree with me, please disagree with me in the comments. I would be happy to reply. And I hope to see you next week. Bye.